Welcome back to Halftime Report on CNBC-TV18. As of now, Nifty is trading almost near the day's highs, 26,071, up 0.5%. But let's put the spotlight on EPack Prefab Technologies. Now, the company's posted its Q2FY26 numbers, strong set of numbers that came in from the company. Revenue seen an increase of around 61% on a year-on-year basis. EBITDA saw a jump of 80% as well. We have Nikhil Bothra, the executive director of the company, joining us now to talk to us about the outlook. What should we watch out for going forward? Ordering trends, how is that shaping up as well? Thank you so much for joining us, Nikhil. Let's just start by talking about overall the order book in Q2. How are you seeing that shaping up? What is it standing at? Any depletion in Q2 that you're seeing coming in? What is the outlook there as well?
Right. Thank you for having me on board. So, like the H1 has been very, very strong for us. We have seen strong growth in revenue as well as EBITDA and net profits. If we talk about the order book, that is also very strong. So at the end of September, last month, we were sitting at order book of 920 crores. And further, in October, we have added further around 250 odd crores of order book. So currently, we are sitting at around 1150 to 1200 crores of order book, which is looking very good for the next 8 to 9 months. So I think, the tailwinds are strong. The industry is supporting. We have been delivering the numbers that we have been committing. So overall, it's looking positive in the coming quarters as well.
So 1100 to 1200 crores of order book right now. What are the kind of orders that you expect over the next couple of quarters? And if you could give us a sense of the execution as well, what is your revenue likely to be by the end of this year?
Yes, so generally, we have seen the trend that our order book to revenue ratio is 1.5 times. So at the start of this financial year, we were sitting at around 915 odd crores of order book. So that should translate into 1.5 times of revenue for this year. Currently, with this financial year, we are targeting to end at around 1200 crores of order book so that, we have a good growth in the next financial year as well. So overall, the growth has been around in tune of 35 to 45% in the last 3 to 4 years. And we are being in that range and targeting the same range for the next financial year as well.
Okay, so you're expecting 35 to 40% growth in terms of your top line for FY26 and ending your year with around 1200 crores in terms of an order book.
Yeah.
All right. Nikhil, just about the margins, because, we are talking to you on a day where metal prices are at record highs, copper, aluminium. So give us a sense, because of these kind of prices that we're seeing, is there any impact in terms of your margins, or do you think that it would be a pass on?
Yeah, so generally, there's not much impact of steel price volatility in our, margins because we have, around 1 month of stock. Then we have given LOIs to the suppliers of steel, which is around delivery of around, 6 to 8 weeks. So generally, when we're booking orders every month, every week. So generally, overall in the financial year, it nullifies. So there's no much, difference in terms of, impact on profits for the steel price volatility. Overall, yes, our margin has been growing because of the benefits that we are getting of economies of scale, and that is seen in the EBITDA margins. Also, in terms of debt, we are much lower. We are net positive, so that is also being seen in the PAT margins.
So what can you end the year with in terms of margins? You've done 11.5% for this quarter. What would your exit rate be?
So generally, our strategy has been penetration strategy. So, we want to expand and have a bigger market share. So we are targeting 10.5 to 11.5% of EBITDA margins this financial year as well. So that, we give a good, strong order book and give a good, strong revenue growth, maintaining the margins the same levels.
All right, so you intend to maintain your margins at the same levels, and 1.5 times order book to revenue implies that this year you will have around 1200 crores of revenue. The next year you are targeting closer to 1800 crores. That would be fair, right?
Yeah, so this year, H1 we have done around 730 crores of turnover, and we are sitting at a good order book of around 920 crores. Plus, we have added another 250 odd crores in this last month. So, looking at that, yes, we'll be easily exceeding that commitment that we have given.
And do you have the capacity for the same?
Yes, currently we have the capacity. We are at good utilization capacity right now. We are using overall capacity utilization around 60-65%, and our peak capacity of built up sections is around 80-85%. But like we have raised a fund from IPO, which we'll be investing. So we've already started the work in both the greenfield and brownfield project at Rajasthan as well as Mambatu. So we will be adding further capacities of steel structure fabrication in Mambatu by next quarter, and we'll be generating revenue from the last quarter of this financial year from that investment.
What would be that additional revenue in Q4 then?
Yeah, so it'll ramp up slowly, but overall, if we see we are doing an investment of around 60 crores in that, and the overall asset turn is around 5 times. So we can see around around 250 to 300 crores. But it'll ramp up slowly in few quarters. Also, we have started work in our Capex for Rajasthan plant in Gelot, where we are investing 102 crores and putting up continuous line sandwich panels, which we will see revenue coming in from the second quarter of next year.
Okay. All right, Nikhil, we're going to let you go on that note. Thanks very much for joining in. So that's EPack, that stock up around 6% Take a short break, but we'll focus on Varun Beverages on the back of its Q3 performance on the other side. Stay tuned.